There are hundreds of trading indicators on the market everywhere. However, identifying which ones are the most useful is a challenge for any trader. So in this video, I'm going to be going through a few of those indicators that you can use that are highly effective, and I can promise are going to significantly increase your profitability in the market. So stay tuned and let's get into it. So you guys might well be aware that I am not a fan of trading indicators. However, I acknowledge that when you are a beginner trader and you're starting out, just like I was, we've all been there, we need some good trading indicators to be our guide, help us build our confidence so we can reach that next level, the similar level to where I am now. Okay, so we will identify and cut out the noise so you can use the most useful indicators so you can start building that confidence to reach that next level, reach your goals, and become a more confident trader. So there are two types of indicators in the market. One is called lagging indicators and the other is leading indicators. So a lagging indicator is an indicator that gives a signal to us after a trend or a reversal, whereas a leading indicator tries to predict the trend or reversal before it's happened. And in this video, I'm going to give you examples of both and how we can use them to our advantage in our trading. Alright guys, let's get into it. I want to show you on my screen some indicators that are some of my favorites and the ones that I use in my trading, okay, after many years of experience. So let's get into it. The first one I want to talk about is the Vwap. Okay, this is a indicator that I use every day, whether I'm doing technical analysis on TradingView or whether I'm doing technical analysis on my order flow software, okay, which I'm not going to get into. It's a little bit more complex, but I use a Vwap for my technical analysis and day trading every single day. And the Vwap is a fantastic indicator. It resets every single trading session every day, and it gives us the average price of a security which has traded throughout the day based on both volume and price. Okay, so it gives us an average price or average price of the security based on volume and price. Okay, so I'm going to put up that indicator. Okay, if you want to find it, all you need to type into on TradingView is Vwap, and I have put that as one of my favorites. Okay, so you can find it on under indicators in TradingView, and the settings that I just use the Vwap settings. I take off the upper band and lower band. I just use the Vwap. Okay, and I untick everything else and just keep on the Vwap ticked, because that's the only thing that I want to know is the Vwap. I'm not interested in the upper band or the lower band. All right, I'm going to give you a few tips on how to use this indicator. This indicator is a magnet for the price. Okay, what do we mean by that? It likes to keep close as possible to the price of the security. This is Bitcoin. It likes to keep, like a magnet, it wants to keep touching the price as it goes on throughout the day. So what do we mean by that? All right, what we mean by that is when we get a big divergence. Okay, now we are under the price and we haven't touched the Vwap. Now there's a big gap. All right, there's a big gap. Again, we try to get up there. We try to get up here, but we fall down. And the VWAP is still, there's a massive gap between the price and the VWAP. And if you are long here, this is a great place to look to be taking some profits from your trade. Okay, that's one thing. The next thing, when you see a gap like this, that is an indication for me as a trader that this is going to start trading back towards the VWAP, because that is the average price of the security for the day. So at some point, we are going to touch this VWAP again. And another way you can use it is when we touch that VWAP, this is now going to act as resistance because we have a confirmed downtrend. When we break it here and we start trading under it, we have a confirmed downtrend. Okay, this indicator is a lagging indicator. This is not a leading indicator. Okay, this is based on historical prices. That's the way the indicator is formed. But whether it's lagging or whether it's leading, we are showing you how you can use this indicator effectively. Okay, so if you are long from this area, you would be looking to take profits around here is a VWAP. That's the place I'll be looking to take profits. I'll be very confident for the price to reach this level. This is why indicators like this can be very, very useful. It cuts out the noise. It helps you stay calm, because I've seen many traders in the game. They get into a trade, and as soon as they get into a little bit of profit, they get out. They panic, and they're like, I want to bank a little bit of profit just to feel good. But when you know what is going to happen, the way I've just explained, that the price is likely to touch the VWAP when we have massive divergence between the price and the VWAP. So when you're long, you know your target is around VWAP. It doesn't have to exactly hit it. You can get out before the VWAP to stay safe, because sometimes it front runs the VWAP. But the point being is you won't panic if you're long. You won't panic. You won't try and get out here. You won't try and get out here. You'll wait until we get as close as possible to the VWAP. Okay? And then if you wanted to go short here, you can do it. All right? And if you want to have extra confluence, okay, here it is. All right? So I pulled this Fibonacci from this pivot, which caused this massive downtrend, okay, on the day. I pulled it from here to here. We crashed right into the golden pocket, you can see, and we've got VWAP resistance. We come under, hit the golden pocket, and immediately retrace back under the VWAP. All right, that is, for me, a signal as a beginner trader. If I'm looking at this, obviously I use order flow for confirmation, but if you are a beginner and that stuff is a little bit too complicated at this moment of time, I'll be looking at something like this. And for me, this would be a confirmation to get into a trade like this. Okay, here we can see again, we are getting a massive divergence between the price and the VWAP. Okay, and at some point, I'm expecting the price to get back up to this VWAP. Okay, and another example could be you could pull a Fibonacci from this pivot high to this pivot low. Okay, look at this. All right, this VWAP, as soon as it starts to trade into the golden pocket, and price, I expect price, you know, maybe to do this and then start coming towards the golden pocket. I expect the VWAP to come towards this range, okay, and then you've got confluence of VWAP and golden pocket once again to take another possible short trade. Okay, this is how you want to be using trading indicators. I have seen people with hundreds and hundreds of trading indicators on their charts. They're using like 10, 15. It's crazy. You do not want to be doing that. Keep it clean. Keep 1 or 2 indicators on your charts. This is a great one. Okay, I know institutions, big traders, retail traders, and big banks, they're all using Vwap, okay, because it's an average price throughout the day based on volume and price. So bigger players also use this because they don't want to cause massive fluctuations in price throughout the day. They don't want to be shorting down here when they know the Vwap is up here. Okay, they don't want to do that. If they're going to short, they'll wait for the price to get up here and then they'll place a bigger order in there. Okay, so they like to place their bigger orders around the Vwap level. All right, so that's what you also need to know, that why Vwap is a great trading indicator to use. All right, another trading indicator that I like to use personally is an RSI. Okay, so you can type in RSI, find it on here, and it will pop up at the bottom of the screen like this. Okay, so an RSI stands for Relative Strength Index. It measures the strength of a particular move. Okay, so anything, as you can see, the way I like to set this is I'll take off all this. I'll take off the moving average. I like to keep the color orange so you can see it properly. But this dotted line at the top is a 70 level. The bottom is a 30 level, which means anytime the price gets above the 70 zone, it's considered overbought. So the price is due for a reversal or a cooling off because too much of the security has been brought up, and that's why we get overbought signals. If it gets below 30, that is an indication that the price has been oversold and we are expecting somewhat of a bounce at that point. As you can see here, when we get here, we get this little bounce, all right? But that doesn't mean every time the price gets into overbought that you just blindly just short this, okay? That's not the way we use the RSI. That's not what it's for. I see so many people, as soon as it gets into overbought or oversold conditions, they just buy along. You know, they buy or sell based off just this indicator, and that's not the way to do it, guys. All right. RSI is a leading indicator. It leads the price. Okay, it forms before the price forms, so it's considered a leading indicator. It gives you an early signal of overbought and oversold conditions, okay, on a particular asset. But the way I use it, I want to give you an example of the way I use this indicator. Okay, first what I do is I would identify an area of supply. So for example, I know this is an area of supply right here. So I would mark this on my chart. Okay. Let's put it as red because that's the color we like for supply zones. Okay. So as you can see here, the way we like to use them is for divergences. So what do I mean by divergence? Okay. What I mean by divergence is you can see here the price is moving higher. Okay. However, the indicator is moving lower. Okay. You can see that. This is what we call a divergence between the price and the RSI. Okay, so that means this trend, this little price action is getting weaker, okay, because RSI is a momentum indicator and it's showing us, it's giving us an early indication of divergence that the trend, this particular trend, is getting weaker. And the great thing about this is, where is it coming into? It's coming into this massive supply zone. This divergence is coming right in to this supply zone. And that is how we use the RSI. When we get divergence, when we get weakening momentum into a supply zone, it doesn't get much better than that as a trader, guys. That's what I want you to understand. It doesn't get much better than that. That is what I would call a grade A setup. Now, I would use this. I still do use it. I have it on my chart. I want to see what the RSI is doing. I use this alongside the order flow. If you want order flow stuff, go on the website if you want to become a professional trader. But if as a beginner, this is what you want to learn, this is how one uses the RSI indicator. Now, supply zones, demand zones, I did a video on this last week. We will link this somewhere up here. Okay, go and watch that. There's a great video for beginners on some beginner level strategies that you can use every single day to extract money from the markets. And then when you combine that with trading indicators, now you have a proper toolkit as a beginner to get started, and you will start extracting money from these markets. You will gain confidence. You will build confidence. Okay, I can promise you that you are going to be building some confidence in these markets. You will love the game of trading. You will want to get better. You will start understanding what is moving the markets. You will dive in. This is how I started. You will start diving deeper, and then you will want to use what institutions are using. And that's why I have designed an advanced course when you get to that level. Okay, and we will talk about that in future videos. But this is how we use the RSI. And now let's make this even more powerful. We want to combine this with the volume. Okay, as you can see, the price is moving higher, the volume is moving lower, the RSI is moving lower. Okay, it doesn't get much better than that in terms of confluence, guys. Now I hope you can see how we are painting a picture. The market, the price is telling us a story. Again, when this price starts to move back into the supply zone, look at the RSI. Again, lower high on the RSI, weakening volume. You could have even took a trade here, got out here, took a trade here again on the retest, and took it back down. All right, so that's another way that we use the indicators. Okay, so the next indicator, the final one that I want to talk about, is the moving averages. I'm sure everybody's heard about moving averages. They're everywhere. And I want to explain a little bit about how a beginning trader can use these to execute trades, because I know execution is a big problem for many traders. They need the indicator to confirm for them when and how to get into a position. Okay, so I know many people use moving averages to confirm that. Okay, because execution is one of the toughest jobs as a trader, knowing when to get in and out of a position. So I want to use moving averages to help traders get in and out of positions. Okay, as a beginner, I personally obviously use order flow. That's a lot more advanced level stuff, but EMAs and moving averages can also be used to execute trades as a day trader, especially as a beginner. So I use EMAs. Okay, they're better at tracking shorter term price movements, but I'm not going to go through how it's calculated or what they mean. They're just average prices over a certain period of time. Okay, so you want to click it twice. I use the 7-day moving average. Okay, so you want to go to the length and you want to click 7 on the first one. Okay, and so you can set this color to wherever you want. I use this color. Okay, and the next one, you want to input this as the 21-day EMA. And I want to put this as yellow. All right. Okay. And drop this down to a 5-minute time frame. Okay, using the same supply zone that we've been using before. And we've got the RSI. RSI gave us the signal of a weakening trend into a supply zone. But as a beginner trader, your problem is, when do you execute the trade? Okay, I use order flow, but obviously that's not for the purpose of this video. Another way of doing it is to use EMAs. Okay, now, as you can see, when the price revisits this level on much weaker volume, that's one confirmation that this is going to reverse again. Okay, and when it does, you want to be ready to execute this. Okay, and when do we get that execution signal? You get that execution signal when the EMA 7-day moving average crosses underneath the 21-day moving average. And when do we get that cross? We get that cross right over here. Okay, so you would enter a short trade here. So you enter a short, okay, stop above the highs, and then you want to take this down to a reasonable profit target. Okay, you would get over a risk to reward ratio if you exited here around a 2-to-1, which is plenty. Okay, you're risking $1 to make $2, and that's a decent return on your investment. Okay, that's what we tell traders to be aiming for, at least a 1.8, a 2. The more, the better, but you can't always get that. Okay, although this price just keeps going down and down. Okay, if you get a reversal, you want to see a nice move out of here. Okay, we've got this one, but again, dip straight back in to the moving averages. Okay, you want to see continuation back towards that. You don't want to just see a fake out and then get back towards the EMAs. If you want to see this moving higher, you want to see this and then that. Okay, and this to start following the price. That's when you know you're back towards higher prices. But if you're just getting this and then back down, you're back to being bearish again. Okay, but I don't use it for that reason. For me, this is not a short trade. Okay, just because we're getting towards the 21 moving average, that's not how we use this. I know I see traders all the time. As soon as it hits the 21, they short it, and that's not the way we use it, because you're going to lose a lot of trades. You don't want to be scalping like crazy. Okay, 2-3 great setups every single day, it will do plenty for you. Okay, you don't need to keep taking 40-50 trades. I see traders taking 40-50 trades a day, and that is absolutely crazy. You don't want to be one of those people. Okay, keep to quality over quantity, they say. All right, you want to keep quality setups, 2, 3, 4 trades maximum every single day. Keep them A+ as much as you can, especially if you get, a good run as a beginner. That will help you build confidence. Then you can start tackling the psychological elements of things. But you first and foremost need to know how to trade. You need a strategy. You need to be able to know which indicators are useful, which ones are garbage, what trading strategies are helpful, which ones are not as helpful. Okay, so you want to have that knuckle down before you start moving into, trading psychology and things like that. All right. But you can see how one could use the EMAs. All right. So I've talked about a few indicators that I like to keep an eye on. I can use these as a trader. I know beginner traders are going to love this. Use it because it's a decent way to start off with your trading. So hopefully, guys, you took something away from this video. Now, I hope you're going to get rid of the 100 indicators that you have on your charts. You want to keep it clean. You want to keep it simple. You want to use the most effective ones, but it's about being able to combine the indicators with what's going on with the price action. You want to be combining technical indicators with your other technical tools to build a framework to be able to help you in your decision making. If the indicator is not helping you with your trading decision, just remove it from your chart. Keep your chart very, very minimal and very, very simple. Use the most effective ones. I've given you a few examples of which ones you want to be looking at using. However, if you're comfortable with using other indicators, as long as they provide you with some confluence and you're able to use them effectively, you can go backtest them. That's the most important thing. Backtest them with other technical tools, combine them and see how they are working for you. Okay, if you found this video helpful, guys, hit that like, hit that subscribe button. See us in future videos. Thank you for watching. We shall see you in the next one.